Welcome to 369 L1 Astro Polarity demonstration. This tool is consumed at the intraday level for trading. We are evaluating 827. So all you need to do is just drop this tool and everything is automated. Beyond that, nothing much to do. Only one input you have to change, which we will explain what it is based on 369 rhythm. Pinning the vibration at the value of 6, which is exploded into double-digit numbers. Alright, so once we drop this tool, you see these lines are plotted. Now this is running on 1 minute chart. Minute has no reference on this. We are going to be you don't need to square the chart. Timing has no meaning in this. The only meaning you have in time when you are trying to add another tool also, which let's say you want to use two other tools which we have talked about to see the endpoints, which one you want to use for trading. So let's add that just for sake of argument. So let's go to 369. Our coders have built hundreds of tools here, but we're trying to bring this to market slow and steady so that you can make money on everything you touch. Okay, so let's say we are going to use single bar mandala. So this is a big bar we see on that day, where it's going to end between these lines. So now it makes perfect sense. Between the two lines we have this polarity tool right here, and this is your long. So this is how you could have traded 828 by adding just these two things. How about 827? So looking at the big bars, they're almost same big bars. Big bar is here, big bar is here. So I put it on the big bar, and what do we see? We see the market is going here, is stopping here. And what do you see in this? Now you can also, as Gen said, always look at last week's high and low. Also look at yesterday's highs and low, because the whole world is looking. There's no reason for you also not to look into this, but we prefer that you look into yesterday's polarity right here. So what are we saying? We're saying is from that big bar we are going to be trading when the market gets into these two traps. All right, as you get more practice, you may come with some other ideas as well. So let's say market is going here first thing in the morning, and you got a first smackdown pullback. So this is, if this is going to hold and be rejected, this is another section of the same thing happening right here by 2 days, and that's all you need to do. We also will like to add, say, indicator here. Now we're building a trading desktop here, so we're going to go to, say, balance imbalance. We can also do a contract tracker. It is, let's do one by one. Let's do balance imbalance, and with nothing to do, just drop it. So we want to see if all these lines are compressing on one side or the other. So the location comes first, and then in the end we say, okay, are we on the top side, bottom side? So everything is on the bottom side. Gives us a good information. So we'll put a buy limit here and stop loss is here, 1 to 3. What is 1? This is 1 loss, and 3 is 1, 2, 3. If I stack this up, so this is how you use this combination. How about, let's say, I don't know, I don't want to use this, I want to use something else. All right, we offer you 3 packaged oscillators, which is let's talk about this right now. So let's say we want to get rid of this oscillator. I want to use something else, so we offer you a second one, which is contract tracker. So this contract tracker is a very powerful tool. It is looking at you see the two lines are showing on the top where we think enough contract have gone bullish, looking at possibility of reversal. Okay, and also the rules of divergence apply, right? When the market is making a higher high and contract tracking is not, that means it's going on a very light volume, and this is not using volume, it is using some other things. So using momentum and a bunch of other tools. All right, so there we go. And when it gets to the bottom part, with the small two lines are there, it gets close to zero, and which happened here at the same time. That means enough things have been sold if it is going to operate in a very normal biased rotation. So this is a good rotation to go long as well, and it goes. All right, so let's look at this guy. Look at this guy, right? So here also, this is between, it goes a little bit negative also, but here it is. So here we have these two lines. Probably can make it fatter, and then add polarity, takes off. Here at polarity and on the high, it got some pullback, 10-point pullback. Now it goes to the next polarity. But look at this divergence now showing up. The contracts are not tracing according to the laws of momentum, where more buyers should be the one pushing there. It went to do the retest. And again, as I said, keep an eye on yesterday's polarity, which is right here. So it went there. Okay, we can also do C54, or let's keep Mandela going. First of all, let's look at this big boy where it ended. It ended here in the polarity. All right. Okay, so this is a big range, but I'm only interested in let it emerge together. Look at this zero as well. So now it makes perfect sense how things are coming together. Contract at zero, it has come down. Mandela says a reversal range. If I do C54, it will be somewhere here as well. We will share all these things. Again, I think we have demonstrated each and every tool applied on a single day. So it's not we're showing random things at random times. Everything is applied on 88, 27, 28, right? All right. So you know, well, because if I show you different days for different tools, it doesn't make any sense what's going on. All right. So now market is going up and up and up. So when you see it has gone above the line, you're looking at anything big. This one has gone above the line. It is at the overbought situation. Is there any big bar which has come, which is merging with polarity? So this is the biggest one we saw. It's not merging with polarity. I'll ignore it. And this one is even big enough. Some seller came in at the sell at the short location. This one came. This is giving us some idea. So it got some points out of it. It wasn't done doing this. All right. So now this big boy comes later on right here. This big bar. So we were trying to go down. They're trying to see this. The tails are coming on. Sell tails. You know, and it didn't do anything. Okay, that's fine. That's why your stop losses. Okay. Now this big boy showed up. Where it is going? It is going here. See that? And where is this going? Is now you see divergence. Now it's going. Now we have double polarity from yesterday and from today. What do? We put a. If it goes, you put a short location here. So this is just a quick demonstration how we can put this together. And you may say, okay, I don't like this contract tracker. What else you got to show us? Well, in level 1, we offer three things, right? I told you: balance imbalance oscillator, contract tracker, master oscillator. And you can put all three together too. Well, you'll take a lot of space here, but this one takes a little bit of time to load because it is using 15 different things. So can't do much about it. So you have to just patiently wait for a minute or so. There are 70 different calculations happening at the same time, bar by bar, and it is doing it for all the data 70 functions. All right, so here it comes. So there are a bunch of rules here to trade as well, and we talk about pressure situation. So here it is overbought oversold situation, sell areas, sell when it crosses below this, a sell. Now this one is this one also showed up sell here, buy here at the bottom, right? This is the buy area. This is how it looks like, but again, all these tools we have to use in context. This is a 1 minute chart, and it is doing something different with this. So I'm at polarity today or yesterday's polarity. Yes, okay. I'm at overbought oversold. If you have 3 times, 1 time, 2 time, third time, right? Third time it goes. It is trying to say, hey, go down. It didn't do much early morning. I said, hey, go down. It didn't do much. Third time I said, okay. Third time it goes. We know this based on our observation, and it goes. Same thing here. First time. So these becomes the patterns. Second time. Now third time. This happens when the pressure is heavy, when the buying and selling pressure is heavy. This is why I think it's better to also use it with contract. So you have a second chart on the side which is doing contract tracking on, like, say 15 minutes and 1 hour, because they generate big moves, as we can see. Same thing happened here. All right, so let's look at today. And once you see that these lines are like getting out because of compression, and there's so much plotting going on, you can always do Control K, which will refresh line of sight and page of display. It will refresh all these plots which we need. Okay, so the top came here yesterday itself, which means Friday night and Sunday. And then you can see market is taking a downward pressure. It's not able to even get to overbought. So this is again a big divergence. If we compare these locations, that's what we are after if you patiently wait. We did short here, ES vertical spread on the ES future options. So we got 90% profits out, and we're good to go on that one. So let's bring Mandela here. Market doesn't move almost 170 points every day, right? So ISM came and it triggered. So those are the days twice you can expect bad behavior from the market, because market is getting some news at 10 o'clock and then they're just going crazy. All right, so let's see. This was a big bar. This was a projected high and low. So it stopped it here. It did go up all the way. As you can see, the tail is here. That means the bar did reach from here to here one time, and we should be done with this long. All right, if not, if you're holding for other reasons, it should be at least break even on the runner. So this is the big bar now. Big bar. And today what happened? This is a range, and what happened? Same thing. If you have gone long at this polarity, no worries. Now if you've gone long at this polarity, this one was pushed all the way up. Again 10 points. So 10-20 points was still there against the trend. This is how powerful these tools are. There was no buying, even though this was saying buy here, right? It did not lift off. It did not lift off. So one time try, 2 times, I think one more time it will try. Maybe it will come down here and go off. Let's look at the contract tracking. Put it back again. So contract tracking says it's been heavily sold, as you can see here. Heavily sold here, right? The whole area is just like it is heavily sold. Early morning, right here, this was the short. It's not early morning, it is like when the market opened Sunday. Now it was off yesterday. This is Monday. This should not be Sunday. I think when they reopened yesterday, I should say, there was an American holiday. So Sunday is here. And then it traded a little bit on Monday, half a day, and then it opened again. And we see this was actually a good shot. So was this. This was a decent long. It did work out a little bit. This was, again, if I am forced to do something, it should be above the yellow line, between the yellow red lines. This is what it does. You can see this is under normal conditions everything works, right? The short is coming, then again don't short it. Short is coming. Put a limit order here, right? It did not stop you out. Okay, this is long is coming. So let it come down to your polarity lines, double helix. There we go. Long, short area, short area. So this was a long area. Went up very fast, came down. News is coming. ISM 10 o'clock. Same thing here. So now what's going on is monthly rotations, weekly rotations, right? So they took the profits out and then they will bring the market down enough so they'll get back in the market. Alright, this is all I had to share about this. And then, as I mentioned, we do this on a multi-time frame scenarios. So we'll put this on a higher frequency than this frequency, maybe a double frequency we do. So this, instead of having the 3 lines, we'll only get one big line here, so that is for a very large swing. So you have to have 2 of these, higher time frequency and lower time frequencies, and they are set up with 369 portfolio metrics of mathematics. Thank you so much.